Yeah, one. Check, 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 check. Looks good. What is happening? Guys, girls, everybody. A handful of people in here. Still early. I love how everybody, I'm not the greatest with time, for sure. But give a couple extra minutes. See if we get some people in. Looks like we got about, what is that, 17, 13. Hopping in. If you guys like this stuff, share all of this for sure with your friends. And I don't have a huge social presence, but whatever you can do, super helpful. Again, just kind of starting this channel. So subscribe, like, all that kind of stuff. Comment, we'll reply. And then share on all your socials, man. So TikTok, I guess, is not really, I don't think that's a thing. Instagram, I just posted on. I haven't posted over there forever. So I'm trying, I'm sorry. Twitter, and yeah, I think we are good. I got Tommy's shooting out. Ooh, CRM, I did not look at that one. Take a look at that. CRM. So I'm gonna hop in and just do a couple of these really quick, just in case. So CRM did trigger. It's a tough call. So over 147, this is what I'm looking at. So CRM, we'll do the strat first. So I look at daily, weekly, strat levels. Weekly here, daily here. Really, we know it's not going up unless it's gonna hold above, was that 147.64. So that would be a 2 up on the day. Right now this is like a failed 2 up. Kind of squeezy, not quite there. The week, it's that same level. So right around that one, your target, if you do get over that 147, is 151.04, which would just put it to last week's high. Right now it's an inside week. So careful, that does look squeezy to the upside. Might be an earning play. Earnings, that's a pre-earnings play. They don't report till later in November. So for now, this looks okay. It looks like a little flaggy, but again, as long as you're over, right here, it's that 147.88. Next target, call it 151, and then up to 155 for a quickie. I think realistically, if you're coming up into this at 151.79, right in that kind of supply zone, could be a good one for a day trade for sure. Feels like coin. I know coin can be squeezy, man. I was looking at Bitcoin, so we'll just throw this up here really quick. Crypto. So this is the crypto market today. This looks good. We'll get into this, but from a planning perspective, yeah, I think, I've been a bull for so long, still kind of longer term bull, but I will say if we were due for a bounce or like going to get a bounce, it's going to be the first half of this week. So I think I'm going to be long. First time in a while. There you have it. We'll see. So crypto's doing really good. I got to look at this whole market in general if I'm going to go long something like Coinbase. So I'm going to move this back to a 30. Here's Bitcoin. We are in serious supply. So Bitcoin gets up over 19.95. Oh, it's got chop levels all over it. So this Bitcoin 19.8, you want to see that hit first. Then you want to see 20,000, call it 200. And if Bitcoin does get over 20,475, this has got some serious upside to run. Straight to 22 and change. I really like that. I'm just gonna put this on I will take coin and Mara and all of the above if this does trigger 20,576 and a quarter. Above this, we got a very clean fair value gap. This big old flusher of a candle. Nice fair value gap all the way up to 22 and change. I like that. That would be a nice ride on coin. Good eye for sure. Let's look at the actual equity. So inside week, inside day, not quite triggering in either direction. So I'm going to watch that crypto market for the catalyst. For now, if you're on the upside, hey, look, this thing has a tendency for sure, especially lately, to bounce up off this 62 level, even like 63. So as long as it holds over 60 Right now it's 66.17, this kind of supply. It's gonna battle here, but once it gets up anywhere higher than it is right now, it gets really squeezy. So you see these big old candles? Check this one out, right here. Super squeezy at these levels. 69.09. Try to, not so squeezy today. This is the big pivot. Look at how clean that is, all the way across 69 and change. So as long as this can hold that level, you should be able to at least chop to the upside. I think the squeezes have been done. I'll just say coins, premiums intraday, insanely expensive, like disgustingly expensive. I took a look at this that I was looking at this morning. It was like 70 call was like 400 something bucks like that. I'm like, oh no. This is too high for me. Could bounce here, but yeah, this would be a quick squeeze. This is quickly to 73 and potentially higher. You're upside 84. Is that wild? I mean, absolute profits taking. Let's see. Oh, you're right there, like 74. This is why. So 74 right here is running into all this, right? So that's going to be a serious profit taking level. All of this. Oops, a little too big. One. All coming back to this guy. Cool. Load up the fuel for the rockets. Yeah, it could. It breaks this? Yeah. Then okay. 85. Probably very quickly. Very quickly. It'll seem like a wild YOLO overnight swing, but that's the way it's gonna go down. Disney, almost 2 up on the day. So again, daily, looking at strat levels, right? So I say strat levels, they're just candlesticks. They're not new. It's been around forever. Almost 2 up on the week. Here's the deal with Disney. If Disney can break 98.19, yeah, this is gonna be a big deal. So this is a smaller time frame. Let's get here. So here's, it really tried. The breakdown level is, it's kind of a zone, huh? Just gonna map it out real quick. In here. Oh, you are on it. Literally right on it. So if you're long Disney, you cannot be long below 96, 92. But if this thing goes, yeah, it's going to be triggering longs on the day, on the week. Everybody's going to see this. You might be out before them. Your target, and so you want to be careful of this double top here. Just over 100. You can call it 100 even. It's going to be a nice psychological resistance. And above that, I have, let's see, this level, 103. It's probably about $5 increments from there, or $3 or $4 increments from there. I'm trying to grab this wick right there. 103.30 and change, which is, yeah, a breakdown here. And this is just a short below. I hope this isn't a level right now. We're going into. God, these wicks are crazy. 98? Are we? Yeah. Ooh. That's why that 98's coming into play. That's a toughie. I bet you didn't see that. I wouldn't have seen that. So what's interesting about this right here, this 98, is if this really was like a good long, here's what I'd be looking at. I'd be looking at structure having been broken, right? So lower high, low, lower low, lower high, nope, lowest low, break of structure. Didn't quite tag this level. On this uptrend here, that wick, right about where it is, 90, it's about where it is. That's the place that everybody steps in, right? Because this is the first higher low after the break of structure, and that's what we're looking for if we're looking to go long. These circles are killing me today. Anyways, definite watcher. What I will say is when we go through the calendar, it's not a lot of headwinds right now. So it could be good. Love the rocket ships. Do you have anyone see around Disney Coin? I think that's it. What do we got? We got 22 people. Cool. All right, we'll start. All right, so morning. Today is the 17th. Yeah. So got a lot of stuff on the calendar. Actually, a handful of trades today for sure. But the biggest thing right now, so you got earnings season coming up. So if you guys are interested in doing an earnings course, I haven't actually decided if I want to do the earnings course. Like we have a full-blown trading system that's very specific to earnings. So you guys let me know, ping me in social, Twitter, YouTube, whatever. If you want to if you're interested in joining an earnings course, let me know. Otherwise, the truth is that the intraday trading and the swing trading is so freaking good right now that like, it's tough to pull away. And I get it, right? But if you're someone that's looking for a little bit more advanced trading or to learn options better and how they work, this earnings course that we do, it's absolutely something for you. So let me know, ping me in the comments, ping me in Twitter, social, whatever, and maybe we'll do one, maybe we won't, we'll see. But I have it's a systemized way to trade, earning system, extremely profitable, but it takes some work for sure, on my end and on yours. All right, so before we get into this, we are an options trading group. I do have to read this kind of disclaimer. Call 188 options before you start trading. Get a copy of standardized characteristics and risks of standardized options. And man, I mean, this is the stuff, right? Like anything I say here, it's not financial advice. It's all just my opinions. I'm not telling you what to do. I'm just telling you what I'm doing. Cool. Oh, I didn't finish the recap slide. Holy crap. Anyways, so there's a ton of stuff on the recap. Actually, most of which to me is all about Bank of England, right? So like what happened last week? We had this massive sell-off and the Bank of England legitimately went into a margin call. So I don't know if you guys understand like what was going on with that, and I can try and might be able to find something really quick. But they were it was about their pensions, right? And they were taking loans out to low liquidity, and they were essentially like, they have these risk provisions where, hey, if you take out too much, you have to hold these. It's like if you're in any broker, right? You have to have a certain amount of cash and you have to meet certain risk parameters. Okay, they weren't meeting their risk parameters, and they were trying to go down this route of actually changing the risk parameters so they wouldn't go into a margin call. And it basically turns out that like, okay, there's this new secretary chief out there that had a budget that they threw out that it was just crap. And I mean, kind of threw the whole situation into a frenzy. And so the prime minister on Friday actually fired him. So on Friday, that also was the last day that they were going to be buying bonds. And when they talk about gilts and things like that, that's actually, I don't know if you guys remember, but quantitative easing. So we went into this QT, quantitative tightening, where basically, how easy is it to get loans, right? Like in the pandemic, the governments were flooding the markets with liquidity in terms of cash. Like, so selling bonds, buying bonds in terms, so that they can get, like, people would spend, things like that, right? Everybody's happy. And then quantitative tightening is when this interest rates go up and everybody's trying to tighten spending, like don't spend as much. Right now, we're in something that's technically stagflation, which was like the worst case scenario. We're in the worst case scenario where inflation continues to go up, but even though people are buying less things, the things that we buy are more expensive, so spending isn't actually like going down. And the velocity of money, like how much money is flowing through people's hands, that's actually what we need to kind of like slow down. And so part of the kind of panic right now in the market is that, like, look, we've done all these interest rate hikes, and the truth is that it's not working. Right? Like that, it sucks, but like inflation is not going down. I'll see if I can pull some of this up for you. But like our CPI and things like that, it's barely moving. And I mean barely moving. Let me just go through this and I'm going to move this to a 3. So let's see, previous week. Yeah, so CPI, look at this. So this was the year over year number. To me, I actually would prefer to look at the monthly number, month over month. But here's the thing, like our inflation, look, 8.3 was prior and we came in at 8.2. Okay, so we have like tripled in interest rates, but inflation's not really going anywhere. So like, what do? That's the problem. And so that's the situation that we're in. If you look at month over month, so the year over year number is what it is. The month over month is what's going to be changing things like on the longer term basis. But again, it came in like, look at this, it's flat, right? So core, by the way, I say this every time we go, this core does not include things like rent, gas, electricity, food, which is like the biggest piece of it, right? And I mean, flat across the board. So like, what can they do? They just have to continue to stay the course, and that sucks, right? Because they're just going to have to continue. They don't have any other tools. It's flat across the board, flat for PPI. Core PPI is exactly flat, month over month. Look at this, month over month was 0.2, and this came out Wednesday, PPI's producer price index, and it actually came in higher. So it not only is it like flat, like producer price index, like that thing went up. What the hell is that? This is no good. I'm just doing this as the quick kind of debrief. It's no good. So anyways, that's the situation we're in. I don't know if you know like what is going on, like UK government bonds, or not UK energy prices. I saw an article. So, sorry, this recap is not fully complete. I didn't even realize. So, did you guys know that in like the UK, there's an energy crisis, right? Like I think you know, but the average, like I'm looking at the screen, so I pulled up some data. It's like the average. They put an energy price freeze out there. The average household spends £2,500 a month on just like their utility bills. Can you imagine? That's like almost $2,500 a month on your electricity and heating. Like that's wild. And so that's the situation they're in. We look at stuff like natural gas and our gas prices. We think it's high here. I don't even want to know what is over there. I really don't know, but it's through the roof, and this is what they're dealing with right now. So I don't envy them whatsoever. I did. So I'm gonna hop straight into earnings. So we are gonna kick it off. So that's the stuff to be like on the radar. We're gonna pull up the charts in a second, and we're gonna look at the DXY. So that's a dollar index, and that thing is, if you remember when the Bank of England stepped in and they started doing all their QE, that completely affected our stock market in general, the value of the dollar. So like if you think that what's going on across the pond isn't going to affect us, you're wrong. This is stuff that we do need to pay attention to. It's not something that we normally have to pay attention to, but obviously it will affect our stock market. So if it's not at least on your radar, take a minute to kind of search the Google and see what's going on over there. Only raise rates in this solution. We'll get back to that. So right now they're kind of just stopping out, right? I don't know what's going to happen over there, but for now they're not buying bonds anymore, and that was really the biggest deal. So they were buying bonds in the UK. Now they're not officially as of Friday, and that actually affected everything, right? Like it affected our markets today. You can see, right? We're getting a little reprieve, and we're coming into earnings season, right? We're not at peak earnings season. I will say earnings season used to kick off with Alcoa because their ticker is AA, but they were the first in the Dow 30, but they're no longer in the Dow, so I forget. To me, earnings season, since I'm old school, earnings season used to kick off when Alcoa reports, but since they're not in the Dow anymore, it's not technically that. So technically, earnings season started last week with the banks on Friday. That's kind of how it is right now. So we did have three Dow 30 components. Holy crap! Did I miss one of them? Forgot who the other one was. Ooh, but we got a ton coming up this week. So we already got three. And so what this is 1, 2, 3, 4, 5, coming on 6 quarters. That'd be a year and a half of data of the top 30 companies. So the Dow 30, so the diamonds I call, or DJ 30. This is how they're tracking right now. And so what's going on in the market is that you'll start to hear, if you haven't already, I know I'm hearing it on TV, is peak earnings, right? Like, does the earnings multiple need to come down on the S&P as a whole? And, the consensus at the moment is actually yes. So what does that matter for us? So we need to know that, number one, the market prices in the future. And I mean way, way future. So yes, maybe like people think that the market needs to be readjusted for their what's called PE ratio, price to earnings ratio. But it's actually going to happen before everybody says it's happening. So that's a good thing to watch out for. When everyone's super negative, like if you guys think back last week, it was just so negative, like the commentary, whatever you see on Twitter, like everybody's just like, this market is going to 280, it's a wrap, we're gonna break 300, we're breaking 360. Like that's the time to be like, okay, time out. I might wanna start closing my short positions here, right? And what's happening right now is exactly that, right? Like we hit that 50% retracement from COVID high to COVID low, to all-time high, and that was at 358, I believe. And dude, if you didn't see what happened that day, like I was short coming in and I didn't have my Barry Allen hands out, and man, I could not close my puts fast enough to like really take profit. I'll just say it was a tough day. And then by the time I was done closing my shorts, I'm like, I missed the entry for the long. I was able to get a little bit, but this is how that market is, right? So how this market is. And I'll be honest right now, I don't think that that's really going to be going away. We're at a specific level right now where it's like, hey, look, have we gone too far? Is it time to base out? Can we pop? And the second that we pop, there's still going to be a few people out there that are like, no, we got more to go. Let's slam it down. So moral of the story, take profits quickly. Don't have massive targets out there. And yeah, I mean, just take day to day. I had one of our guys that I talked to, like kind of one-on-one stuff, struggling, being able to define their bias for the day. And I'm like, coming into the day with a bias in general, it's not a good thing. It's definitely not a good thing in the market, right? Like I can have a bias for the week for sure, but more often than not, that does not pan out to be in my favor. I'll tell you that much. The people that were able to capitalize last week on that massive, and I mean massive flip reversal from being down so much to like breaking the prior day's high and then some, they were cash coming into that day, right? Like they didn't have to worry about closing swings, right? They just had to look at the charts and play what they gave them. And they were able to, I mean, we got some of the traders that were like, multi-1,000% bangers that day. I'm like, oh my God, these are like some of the best gains I've seen in a long time. And then the very following day, like had you come in the next day with a long bias, like I know some people did, what would have happened? You would have been slapped one more time and completely reversed that whole move and then some, especially and then some on Tesla. So like I said, I would just be taking profits quickly, nothing super long dated, so don't get yourself in a position to be having like multi-months of exposure on options. Probably not the best situation at the moment. And if you do, try to make something that pays you to hold. So actually, I do have one. I have an NVIDIA put that I've already taken profit on, and I'm not even really looking at, but today I will probably convert that into a time spread, so I do get paid to hold on that one. So anyways, what's going to happen this week? So this week is the first week of earnings season, and when we ramp into earnings season, it starts as a slow roll, and it's gonna get hot and heavy next week. So what you should know is that typically indices kind of flatline at this time, right? So as much as you might want to have a directional trade on, because certain companies, like especially the week, I think it's next week when we have Meta, Amazon, Google, Facebook, they're all going to report in like a 24 or 36 hour period. Whenever somebody reports earnings, volatility or like the expected move, because of an earnings report, they always move on earnings report, so the expected move becomes higher. And if you're in options, that expected move is priced into the contracts. And when you have a large group of mega cap stocks that are all in the same index, the index itself gets inflated also. So if you're trading SPY next week, if you're trading the Qs next week, this matters for you also. So just be aware, hey, look, you have a ton of companies, IV across the board, in the shortest, and this is, I'm going to say a word that might be a little confusing. It's called term structure. So it's only specific series, or they're called series, but only specific expirations will get this like inflated IV. And it's going to be the ones that capture the actual report, not longer. So usually like 2 weeks out, you won't see a whole lot. It'll still be there, but not nearly as much. But again, trade light, trade quick, and take what the market gives you. So I know a lot of people are going to look at Netflix this week. You guys know Netflix has been like a wild mover. If I'm going to take any long bets, I'm still going to be looking more towards the oil and energy sectors. I think that we'll go through this. I actually grabbed some notes. And I didn't put it up. You know, I had a lot of prep for this one, and I forgot to put it all in there for you guys. Holy crap. Anyways, maybe we have another meeting to go. Last week we went over this. So this is a Fed watch tool. So what I wanted to do this time was, so this picture on the left, let me see if you guys can, yeah. So this picture on, which is my left, I don't know if it's your left. This was last week's screenshot of what the market was currently pricing in from an interest rate perspective that day. So this is as of last Monday. So the market was pricing in like that we could be getting 100 basis point hikes for November. And so November is the next one coming up. And this is the one that's immediately going to matter. I'm also going to look at December because that one matters also. So we have 2 more FOMC meetings left this year. So obviously nothing in October. November's coming up soon. It's in a few weeks, couple weeks, or a few weeks from with you. That's gonna be the next thing that the market's gonna start worried about. But what happened? So coming in to that day, and I think it was CPI. I believe it was CPI that we got that big, crazy move. Someone correct me if I'm wrong. CPI was, it was FOMC minutes came in on Wednesday. And Thursday we got CPI, and yeah, so when we got the CPI, right, instantly, the market priced in, holy crap, they saw what we just went over, inflation's not moving, and it's like, what we've been doing isn't working, so we're gonna have to do more, like what the hell, and so the market overreacted, straight up, overreacted, and so this is what the market was pricing in from an interest rate perspective that day. This is today. So you see how this, like there's no more dark blue. So the market's already adjusting. And so what we're seeing right now is that pretty much we're like 90% probably, this is a 90% probability of a 75 basis point hike in November. Last week, the market was actually giving odds on a 100 plus basis point hike, which I mean wasn't gonna happen, but that in itself, just seeing that right there, that was like, okay, we were probably a little overboard. And so this one, this is December. God. How come I can't do this? Okay, hold control, Jason. All right, so this is December. So this was when we got that CPI note, right? And there was already like on the CBOE floor, they're like, is the market gonna expect 200 basis point hikes? What's up, Jesse? Or what's going on? And I had to draw this line because it was a small like difference, right? But right now it's just barely over, call it 65% probability, or the market is currently pricing in 65% that we're gonna get another 75 basis point hike in December. Which honestly, that could be accurate. And so when I look at this, what's important here is like, is the market really going to change their mind all of a sudden and say, hey, look, there's another probability that we're going to get a 100 basis point hike in November and then potentially in December? I mean, not really. Like, that would be wild. But that's what has to happen if the market's going to take another leg, right? Something like that. So this is just, again, this is that free tool, CBOE, fedwatch.com. You can find it, like, it's super simple. Just Google, right? CBOE, just FedWatch. Boom. And there it is, right? And this is something that we used to, like, live on in the pandemic. Like, if you were ever trading before that happened, and shortly after, this will basically give you, like, what's called risk on, risk off appetite, right? Like, so where's the market currently pricing in today that we're gonna go? All right, so moving forward for the week, we really don't have enough with this mouse. Good night. Sorry, we don't really have a whole lot. We only have one thing that might affect the market, and that's on Wednesday, right? So Monday, we're basically there. Tuesday, housing index, this housing number stuff, I'm telling you guys, it doesn't move markets. It hasn't moved markets. Everybody knows that the housing situation is a shit show. Sorry, excuse my language, but it just doesn't move markets anymore. Jobless claims doesn't move markets anymore, right? Rig counts doesn't move markets typically. There is like a oil status report that's, I believe, on Wednesday that may, but it's only for that one sector, oils and oil services producers. So I don't have the budget statement. We're pretty much past Monday. Tuesday, here's the housing stuff. And again, if you guys are looking at this, so I'm on the West Coast, unfortunately. So I live in California. All times here are in Pacific Standard Time, so adjust accordingly. So plus 3 hours if you're on the East Coast. It looks like Tuesday we get the oil status report. And an interesting one. So I believe it's a blackout period for the Fed representatives coming into November's FOMC meeting. And so I believe this week is the last week that the Fed governors get to say anything before they have to go completely silent. And you know how much they like to talk, right? So there's this weird one more speech like messaging campaign that begins Tuesday night. Super weird, right? So Bullard comes on, he has his speech 4:30 Pacific, that's 7:30 Eastern. Market's closed by then. So after market on Tuesday, the first of the speeches comes out, right? On Wednesday, we actually have 3 more speeches. I don't have it here. The Beige Book. So the Beige Book, if you don't know, let's see. I believe we can do it here. So we want to see for next week, or for this week. The Beige Book is essentially, look, this calendar doesn't even know that it's important. It is Tuesday. Oh my bother. Am I on the right stuff? Good night. Is it Wednesday? Yeah, Wednesday. Beige Book. Right? So this is like all their notes. Like they send their notes, like each Fed president puts their little notes together, and it's like everybody's respective report on how their little section of the country is going, and then they submit it for the next FOMC meeting. And like this goes out, it could move markets. If there's something in this report that's like, oh, people want to go to that 100 basis points in December, like that would come out, and it'd be like, oh, okay, right, something wild could be happening for sure. All right, so moving forward, yeah, that's Wednesday. Building permits, housing starts, that kind of stuff. We kind of went over this. Look, this is where we are. I don't know why housing starts went up, but housing is more residential. Building permits is like commercial. So a little bit less commercial building, a little bit more residential building. Odd. And look, the 30-year mortgage rate at 6.8% for the nation. Wild. Wow, I remember this was like, I'm at 3% or lower not that long ago. Mortgage applications only down 2%. I would have thought it'd been more, but again, not market moving. This is when we get earnings ramping up. So Tuesday, 28 companies report. Wednesday, 53 earnings. Thursday, 71. See how it's ramping? Thursday, jobless claims. Again, not really going to be market moving. Maybe this existing home sales, not likely. And then 1, 2, 3 speeches. Odd, huh? Friday's nothing. I mean, literally nothing. So if I look at this, I'm like, okay, we got a little speech messaging campaign that starts Tuesday after hours. We have the beige book on Wednesday. Maybe there's something around that. But in terms of other economic data, we're pretty much free and clear. And so when we're free and clear in the market, there's not, what the market hates is uncertainty. And there's not a whole lot of uncertainty this week. We don't have peak earnings this week. That's next week. And we don't have a rate decision this week. That's later on. I mean, if there was kind of like that Goldilocks scenario where the market could rally, it is this situation, right? Hopefully UK gets their shenanigans under control. We'll see. Right? I don't know. And again, this was like last quarter. By the way, if you do ping me, if you guys do want to run this earnings course, it's a hardened system. So it's a very calculated, precise, systematic way to trade earnings. We do go through, like, when we get into peak earnings, and then just imagine this: if you had 300 or 100 S&P 500 companies all reporting in a single week, how would you know how to pick the best ones? This is what that does. So it's a systematic way to approach trading earnings, specifically with options. You do need a margin account. It's not going to work for a cash account. And we'll either take advantage of we'll be taking advantage of volatility. So if you've ever Jesse loves eyes. If you've ever been curious about learning volatility when it comes to options, even if you don't take a single trade, this is the best way to learn that stuff. There is no way that you can come out of this course not having a better understanding of how options work from a volatility perspective. It's going to blow your mind for sure. So anyways, let me know. Ping me if you guys want something. I kind of got to gauge demand. Here's the thing. If I run this, it takes a lot of time and effort on my end and the team's end to put this stuff together. So I have to make sure that it's worth it for everybody. And I know it's a little bit more complex because it is spread trades. We do a lot of time spreads. We also do a lot of straddles. And it's not necessarily directional, right? It's more about that statistical trading. Is that the only course you have in options? No. Like this is a quarterly thing. This is probably the best course that we can take that we have for options, especially for someone that's more intermediate level. It's not a beginner level options course. We don't actually have a whole lot geared towards beginners, so that might be a thing. You guys let us know, right? Let me know if you want that options, 100 before 101. Options 100. And I'll put something together for sure. We have other courses available. Like this one. This is actually one of them. Anyways, so that said, let's get into this. So we looked at this, we went over the last week what happened, and now what do we need to do? Now we need to look at the charts, right? Cool. So I know that the guys had some requests. You do want the options for beginners? Okay. Let's see for sure. That'll probably be one like that we give out to like the larger server group. My crew doesn't really have that. I don't think we have a whole lot of those. So here's where we are. So SPY, I'm going to use a 30-minute chart, and I'm sorry, you guys. I'm really sorry. This is, that's freaking tried out a ton of lines. So what I can say is here, this is where we're basing. For me, I haven't had this line, and I don't use moving averages very often. When I do, I use the 200-day moving average specifically on the daily interval, right? So there, if you see it, it's this red line right here. This is locked on the daily. So I don't care doesn't matter what time frame I'm looking at, it's always going to be in the same place. There's a 50. So there's a 50, there's a 200, there's a 50, and there's a 20. Those are kind of like your institutional. These are what people use. You're coming in on a 20-day moving average, again, locked on the day, right? So that's kind of what you're running into. From that perspective, you're also running into an order block that is right here. So when we say order block, we're talking about price action. If you're not familiar with price action, get familiar with price action if you want to learn how to trade. That's all I can say to that. And it is like a little broadening formation, kind of bouncing at the top. So Orange boxes, these are kind of important, right? So orange boxes for me on my chart, this is an average week's range. So why is that important? When anything moves more than a full week's range in a 36 to 48 hour period, expect sideways action, right? So what happened? Like, this is crazy. So Friday, pre-market move. We moved the length of an average week in the pre-market, right? Like the pre-market. This is Thursday, sorry. So Thursday, this is that CPI release. I will also, by the way, mark my charts with fundamental levels. So I'm going to do this, right? Fundamental events, right? Create technical levels. I don't care what anybody says. We're not taking a fundamental bias, but a fundamental event will create 100% of the time a technical level that will very likely come into play in the near future, right? So here's this October non-farm payroll. That is a fundamental event. Something like earnings creates a fundamental event. What do I mean by that? Something that changes how the market will value something on a fundamental basis. So if the fundamental story changes, well, the price will change. And that's going to override your technicals. It will override your price action in the immediate. So just be aware of that. So, okay, why was I not like ready to run this all the way up? Okay, well, this on Friday, well, I mean, this was a massive move, right? So when a stock moves more than an average week's range in a 24 to 38, or 34, 36 to 48 hour period, expect sideways action. And so what are we getting right now? Sideways action, right? Friday, we open way to the high, move yet another full week's range in a single session. That's insane. So I think the upside's probably done for the day at the moment, unless you have something that's on a breakout. But we have another something else that's giving us some direction. That's what I'd say right now. I wouldn't expect massive breakouts this week. I would expect more choppy. I would expect a slow grind to the upside. That's what I would say, right? Like, we might hit some of these targets up here and then kind of like pull back and breathe. Pull back and breathe. Pull back and breathe. And that's what I'm seeing already this morning. So look for those pullbacks. Use your fibs. Get a retrace out there. And then watch for a 2 to 3 candlestick setup to take a small trade. That's kind of how it's got to be this week. All right, so upside targets. If we did move a single average week's range from the open, did we open actually at? I want to grab this open. From the open, right there. And I'm just going to use a different setup. From the open, that just takes us to 377 on the extreme upside, which is what? Which is right back into the supply zone. So would I be going anything more than 375 this week? No, I really wouldn't. And if we get up to there, I'm just going to be taking profit, right? Do you have videos in School of Gains on order blocks? I do, actually. It's called Systematic Stripes, but Systematic Snipes. But I think it's like you have to be part of the group for that one. That one's not a free one, kind of like some of our IP. Although I didn't know that this ICT was a thing back then. Jesse will laugh because I was like, what's the strat, right? I've been trading this stupid strategy for like my whole career, and now they put a name to it. And I'll tell you what, like, none of these systems are new. They're just different words, like universal languages that make stuff that works easier to understand. So smart money concepts, I think, is what it was called before ICT was a thing. But yeah, order blocks and that kind of stuff, it's all there. To the downside, right? To the downside, we have this 350 target, right? This right here, look at this, 347 that we opened at on Thursday. I have a buddy, Cube, that happens to be another trader, a trader in another community. He's actually in a couple, but he's a great dude. And he's like, yeah, man, it was that clean 50% retracement from the COVID lows to the high. And I'm like, what? I wasn't even measuring this. And look at this, dude. Like, on the dime, like to the penny, 50% retracement, COVID low to all-time high, right? Like, I mean, if you're going to cover a short, where do you cover? It's right there. So am I surprised now that I see that? No, dingbat. Like, I should have seen that coming. But this is, you always got to be aware of what's happening, right? So we will model things to both directions, the upside and the downside. So again, I don't want to have a bias, but to the downside, if we do break below this, we have a gap to fill. To the downside, we have this 356 level. Shoot, Jesse, I didn't send the zoom out, but if you have a level, you shoot in chat. But if we break below this, to me, 360 and change right here, we could potentially fill this gap, which will likely come into play at some point this week. So am I going to go short here now? No, I'm not, right? Is there a gap? Yeah, there definitely is a downside gap. Doesn't have to fill tomorrow. Probably wait till you get some of these other upside targets to hit. And if we do break down and get below this, right, your next trigger short would look like this, but it's not until you get, retest this 356 level and fail. Cool? And that would be 350 to the downside. In the interim, right now, if you're above that 368 and change, sure, head for that 373. 5 points on SPY is a great trade. And these are day trades, right? So it's a good level. I'm not going to go over the Q. Well, okay, Qs. That's going to be, you're going to be able to replicate that for the most part across all the indices. So there's clearly a downside gap on the Qs. To the downside, Qs are more dumpy than SPY. So see this broadening range here? Qs are at the very low end of theirs. SPY, not so much, right? So SPY had like 2. It's kind of like a little bit above halfway. So let's see. I'm going to take some of these off. You don't need this one anymore. And I don't really need that, but I'll keep it. I don't think I need that one. So right now, this kind of center line right here. God, I hate when this does that. Was that base 363 and change? If we get below 363, I would just take it one little piece at a time to the downside. I will do one really quick extreme volume from this consolidation. Where's the point of control? Point of control is right there, that 362.84. So below 362.84, cool, right? Short-term bias to the downside. But until then, not quite. Until then, we could fight, right? This is your time frame continuity. So we would be, if you're using the strat green on the quarter, guess what? Well, we're a month into 2 weeks into the quarter, so that could change pretty quickly. We are 2 weeks into the month. We're green on the month though, right? We're green on the day. So right now, time frame continuity, if you're looking at that principle, is actually to the upside, believe it or not. What I did want to do, so you guys can find your gaps on the others. I don't know if you're trading those, that's fine. Do you have any? So Dixie, so DXY, this is the dollar index. This has been the most important chart in the fracking market, right? We are at like key level here of a breakdown, and we did just go 2 down, right, on the Dixie. So this is a big deal, right? So if the dollar falls, this one chart has been determining the direction of the market. When this guy flipped bullish, and it went to 20-year highs, which is what you're looking at, that's when it started to really take a bad turn to the downside on the market. So now we have a lower high. Did we break structure? Technically, we don't break structure quite yet, huh? High, low. No, we haven't actually broken structure. If we break structure to the downside, meaning like we break below this 111 and change, I'm happy to be at least a short-term bull. And if you get below this 109 on the Dixie, yeah, we have a lot of room to make up, for sure. But for now, I mean, technically, yeah, we broke structure. So low, higher low is right here at 112. Let's call it 112, 12. 112, 12. That's the low, right? Here's the high. Yeah, sorry. We broke structure. So high, right? Goes high, low. And we were putting in higher highs and higher lows as we went through this, right? On all these kind of time frames. Here's your last high. Low. Here's this high. And I mean, if you take this 112.17. This is a break of structure. Wouldn't really get like a stronger move to the downside until we get below this 110. But here's what I'll say. For the equity market and the precious metal market, we don't really need the Dixie to like fall off a cliff. That's what's true. As long as the Dixie doesn't continue to make new highs, that's enough of a breather or a reprieve to have a pretty nice bounce in the short term. So really, that's what I'm looking for. If at any point we break above that 113.50 on the Dixie, all right, bets are off. Game change, right? So be ready to flip. That's what I'm saying. We're at this very kind of like moment where, you know, there's a lot of geopolitical stuff that's going to be affecting our market and the strength of the dollar in general. Bonds, man, I really thought that this would actually start to cool down. So TLT, this is like 20-year bond. I feel like, I mean, you guys just saw what they're pricing in from a market perspective. I don't know that this could get much higher. So I feel like this is basing out. I have a little iron condor. I have to adjust this week. I got an idea. I'm probably just going to make it a little bit wider and push it out just a little bit. But I'm going to probably sell some 95 puts and likely also some like 105 calls on this guy. Kind of neutral trade. Oil. So here's the thing. If the dollar falls off a cliff, that's not necessarily, oil's known as like the inflation trade. So if the dollar goes down, oil stays the same. You know, that could, oil and energy is in a bull market for sure. But right now, this is basing out, right? You got that 85, order block right here. One more time with the order blocks. And this bounced this morning at 85.50 was a clean 50% retracement from today's highs and the opening lows, and the most recent lows. So this looks like it could go back into that kind of bullish structure. Not quite there yet. We get above 87. Yeah, everybody's going to notice and it'll probably fly, but we'll see. It's not going down right now. At very worst case, it's going sideways. And if oil futures go sideways, that actually is good. It's not bad for specifically oil services. So we have Schlumberger this week actually reporting, I believe, on Friday. That's going to be an interesting one for sure. I take an upside bet on something like that, but I'll do it with equity. I'll just say that. So the VIX, as long as this guy is below this 30, really, if it's below 31.75, yeah, this is perfectly fine. 31.85. It can chop, and even if the market chops, this guy will go substantially lower. So you might even be able to get away with some, like, what's the short VIX ETF? Who knows? Maybe some VIX puts. We'll see. So this we are. GDX, lame. Gold. I still am going to be bullish on gold. As long as this dollar is going down, here's what I'll say. Like, GDX and its brethren. Look, gold is not seen as a safe haven right now, for sure. It's more of a commodity play. If dollars go down, that's what gold and silver and their respective miners have been waiting for. Like, that's what they've been needing, right? So as the dollar is kind of topping out, GDX right here, basing out. So this, look, is trading at 23 something. Honestly, this thing should be considerably higher. And you have some massive support down here around this 20-ish level, which seems far away, but it's really not. And we did break structure. So high, low, high, low, high, low. This was the high, right? We're looking here. However you want to look at it. Or here, we broke structure right there. And so this is the high right before. If you want to find these kind of things, you just look at not the last low, but the low before that was, boom, right here, 27.97. As long as it's above that, this should be continuing to go to the upside. And really, 23. And so we do have a break of structure here. As weird as it looks, it's not. It might not look like that, but it is. All right. Kind of like old school eyes to even look at this, really. That is kind of squeezy. I'm going to take a look at this on a multi-time frame view. So let's go this. So on the week, inside week, right? On the day, 2 up on the day. Cool. As long as this says above, what did we say before? 2364 should continue higher, at least to 20, just under 24. You got targets well above 25. Actually, on this guy. And then on the hour, we're kind of just pulling back. This is an IV band, so this could actually pull back as low as here, 2339, and stay in that IV expansion channel. Be good for some swing calls. Shout out to Futbucker, by the way, if he's on, I don't know. But I used to go to this Nugget ETF, which was, it's NUGT, is a 2x leverage bull shares against GDX for the miners. And this thing used to fly, right? And when I say fly, look at this. It would go 70 to 230 bucks when this goes on a run, right? 90 to 705, right? Those are massive moves. This is a 2x leverage. So he points out there's this newish one called GDXU, which is a 3x leverage, if you're into this stuff. Also basing 266. I'm like, all right. So I grabbed some of this today for sure. 3x leverage. If I believe that GDX is kind of base out and the dollar should at least start to come down a little bit, that's this trade right here. Leverage ETF. Interesting. I do like that. As long as the Dixie continues down. Equities, Dixie doesn't really have to go down. It just kind of needs to be, it just needs to not go up, which there's a big difference. All right, so on my list, if you guys have any more tickers, this is the last call for tickers. On my list, I had Pfizer. So of the sectors that I want to take a look at, right? So if you're confused or you don't know how to do this, right? First look is like market look. Generally speaking, where's my heat map? Well, today this looks like a really good day, right? Pretty much everything is green. Hello. Holy moly. And by the way, all this stuff, when everything was red, a lot of Altria was bright green. Kroger was bright green. So am I surprised that this is the situation? No, not at all. So that said, healthcare is one of the sectors that had been steady, at least to the upside. And you can take a look at this. My buddy Penny calls it secticals. But like sector rotation kind of situations. If I can get this to work. Come on, spiders. This is just sectors SPDR, like .com, like the spiders, all the major ones. So on a 1 day, right, who's leading the pack? As much as you want to look at tech, I tell you what, it's not communication, and it's not tech. They're still lagging the pack, right? Who's leading? Discretionary today, right? So you can just click on this, and it's going to tell you index weight. Tesla is consumer discretionary, believe it or not. And then I can filter or sort by like who's the strongest one. Tesla's up to what? Oh, it was just such a bad day yesterday. Sorry. Etsy. Interesting on Etsy. That was actually a short target for sure. We'll see. Best Buy. Best Buy's an interesting one. But this is how you go through, right? Energy, still green. Not leading today. Definitely not bearish. And then materials 2.8, and real estate has been seriously beaten up over the last few weeks. That could be a good one to look at. So 5 days. Here's the 5 day, right? Staples, healthcare, financials. So if I go into staples, what do we want to do? Any of these? Not really. Procter, Costco. We'll see. Walmart's definitely got some option trading available. We'll take a look at that on the materials. Albemarle. That is, I think it's is it uranium? Or is it? Anyways, this is a good one. Not for options. But, alright. So, Pfizer. I know, super liquid in a healthcare sector. It's been decent the last Actually, this is 5 days. Where's my healthcare? God, this thing is moving around for me. 146. Is this moving? Oh yeah, 5 days. It's bullish even when everything was red, right? Today, it's still bullish. That's why I want to look at Pfizer. I looked at Pfizer. We got some clean levels today. First look on the weekly, right? So this purple line, by the way, this is a 200-week moving average. That's a big deal. And we got a 2 up on the week, right? So as long as we hold above 43.55, this thing has a lot of ground to make up. If I just took, I don't need to go this far out. No, that's what you don't do. Daily, right now, we are near the first target at 43.77. But I think this can go, really, if it can continue through and break through this 44, we have this prior kind of downtrend. It could actually get all the way up to this 46 in short order this week, right here. And we are already in the trade. Right there. I don't want to take it much further than that, but it's a nice little catch-up trade. No question for me. That was the daily. So hourly, we are here. Took it just recently, 43 and change, when it broke above this. And this 43.50, this is a big deal. So this is the quarterly and the monthly, prior quarter and prior month low right here. So as long as it stays above this, this should continue up. And hopefully what was prior support doesn't become resistance. It was resistance here. So if it gets back below that, you got to close the trade. All right, that was number one. We already looked at GDX. Nicholas wants NVIDIA. We will hit it. So NVIDIA, big old downtrend for sure. So these yellow lines are going to play a part. I'm going to take a look. So on the week, this thing is just beat to all hell. We had first downside target 114 and change. I'm going to take some of these other lines off. Cool. So I don't really want to take another look to the downside. If this breaks below 107.90, it's going to take another leg lower, and it would take it to sub 100 in very short order. Be aware of that. And a lot of the stuff is taking a look at pre-pandemic highs, which would be 75, 73. That's the thing. Right here, I got this kind of base. So I'm going to take this level right here. So see right here where everybody's kind of like defending this initial support built at 128. That was a prior, I'm going to sync that to the rest of the charts, was prior support that did become resistance. That's way up here on the hourly chart. Already had it. Oops. I think I took it short right there last time it got there. But what I would say is like you can't take this long until you get above 121, or if you want to try, you could trade up to here. Here's the deal. You're going to run into this 121.26 level, and it could slap you right in the face and go back to the downside. This is a broadening formation right now. So what I could say is like, look, your 200 week is 128. Does it have the possibility of just going like this? It totally does, right? These things happen all the time. So if it does break this level, 127, next target 132.50, just what it is. And this right here, again with the order blocks, sorry, this is going to be your higher level supply. For now, you need to worry about this, right? So taking it long here now would be essentially taking a breakout, which probably not the best idea to do in this market. You want to look for your retracements. So the retracement would have been here, and then that trade is probably like 115, probably coming to an end in short order right now. Let's see if I wanted to go that route. You could make it up to here if this was that upper broadening range. But that'll come into play really not until you break that, continue breaking highs. So I would just be aware, hey look, 121.20, you got a lot of supply up here. Anybody that bought down here is going to be thinking, well, I'm back to break even. Should I sell? Right? And that's kind of what an order block is. Cool. For now, high and tight, but you're right on that. Look at that. Just slapped it. Why don't we take a look at AMD, see if it's any different situation. Nope. AMD, same situation. These are setups where like it could just pop tomorrow. Like it could go completely sideways and you open like an overnight call and it opens at those levels only to completely flush down out of the gate. So if you're going to trade it like that, if you're not in an active move, that's kind of like what it would look like. And if you miss that, don't be tied to a direction. I'd say that. Upside target on AMD 61, 67. Massive overhead supply, 62.85. Yeah, this 61 right in here, this little level, 60.19. I had a $60 call on AMD, actually kind of picked out. I like this one a little bit better. It doesn't look like it's bounced as much. And this kind of retracement here would be nice, like clean 50%. We'll see. If this gets over that 618, then yeah, that's probably okay. And as long as it stays above 57.50, this could be one of those chop to the upside kind of situations. But today, if it breaks over 58.56, quickly to 59, so quick dollar, and you might even get lucky to the upside on this guy. Easier targets on AMD. Downside, yeah, clear short below 56, straight down to this 52. So, have both. All right, I think that's it for now. GDX, we went over some semis. You want to do Tesla? I kind of think Tesla's like sideways. Did you guys know that Tesla bought like a cologne or something? Did you see Elon pimping his new perfume? I saw that for sure. This is what we're gonna get, right? When we're stuck at these kind of like support levels, you have this 3 outside day, 2 outside engulfing candles in a row. We're gonna have an inside day. That's how it is. And you got earnings coming up. I think most of this early selling, fear of like what might be coming, that's the 19th. That's in 2 days. That's Wednesday. NVIDIA. Yeah, burnt hair for 100. Yeah, it's called burnt hair, right? Right? Yeah. Oh, God. Yeah, not a joke. God, I should have had this. That's amazing. Hey, he knows how to support his customer base. Beautiful. That guy's a rock star. All right, right now I think Tesla's going to be an inside day, so it's going to be one of those IV eaters. And it's not like you can do a condor either because you got earnings coming in 2 days. So it's going to be, to me, I'm not going to, you guys believe it or not, I'm not going to trade Tesla this week. Does that suck? Like, I'm just not going to trade it. Yeah, I have no edge if I trade this thing. Not yet. So yeah, we're right in that kind of like lockdown zone. Look at that. Talk about a barcode. Oh, thank you. All right, guys. That's it for how do you like Bank of America? So I actually looked. So JP Morgan was my first look this morning, and it was for that kind of like financial follow through. So I know the bad news. So as we come into earnings season, I'm going a little over this week, so sorry. As we go into earnings season, what I'm looking for, and you should know, it's good to note this, I'm looking for some seriously horrendous results on earnings and good price action. That's going to be my key to let me know, hey, look, the bottom's probably in for these particular types of stocks. Specific industries, I am not looking to go long, not heavy long in tech or any type of high growth stuff. I am like specifically focused more on industrials, energy, oil, and oil services for the back half of the year. If we get some like, what I would say is like the earnings estimates for the S&P, as I'm looking, I'm just like that interest rate estimates, like what is the market pricing in? They're getting pretty bad. So like the estimates are already like, hey, look, we got everybody's like, we got to lower rate, we got to lower estimates, go to lower P estimates, whatever pricing. It I think it got there quite a bit. So we will probably have a lot of situations this quarter that you'll see like better than feared kind of situations, or if people get hopium spun up, I mean, not going to be good because you can get slapped around. Typically, earnings, you want to be short IV. I will say like the last few quarters have been like, I say Volmageddon. Like you see a lot of like situations where IV is actually underpriced. And I think one of them was going to be Procter, where I can see, hey, look, there's something trading in a clean channel for like the better part of a week, right? Like 1, 2, 3. This is the third week in a row that it's in a very tight formation. I say 1, 2, 3 weeks in a row. It's basically flatline. Something like this, IV's probably not very high at all. Could I take a bet on something like that? Most likely. We have some tools and stuff that you can look at. This thing looks like it's, well, I want to make a little run for it now. But the thing is, with higher volatility comes higher time decay. So you have to be worried about that theta too, right? Your contracts will have more theta decay than normal this week and next week. And usually when I do it, they're overnight trades. So they're kind of like opened at the close, closed at the open. This does not look bad. This does not look bad for a couple bucks to the upside either. I'll just say that. All right, guys. So Bank of America in particular, that was the question. I'm sorry. They reported this morning. So for me, it's no touch today unless it's way outside its daily range, which it is, as long as it's holding over this. You got to have a parabolic move. So as long as this thing, it's sitting at its 200-week moving average, and I'll say these 200-week moving averages, look how choppy the axe support, and then boom, flusher to the downside, resistance. Could you get a quick squeeze? Yes. On something like this, Bank of America, this is a no swing, right? Can you get an intraday move? Yes. But should you expect that you're going to keep a penny of your intraday profits? You should not expect that. It's very unlikely. I mean, you're crossing a 50-day, you're crossing a 200-week, you got a 200-day way up here, 37. Could you get up to like that prior top 36? Yeah, you probably could. So that's a couple bucks more to the upside, but not much, man. Here's what you're battling with right here. All of this. So, be a tough one. Yeah, you're right on it. So this was your support, right? Broke down, resistance, 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 breakout here, 1, 2, 3 days. Okay, support again, breakdown. So you're at one of those like key pivots where like maybe it carries, maybe it doesn't. But regardless, what is true is that your IV after an earnings event burns off in kind of stages. So it's that first half day, volatility is like coming in significantly, as long as it has an average move, which, by the way, Bank of America is not having an average move, I don't believe. Yeah, this is an outsized move. So your IV is still high. The second it starts to retrace a little bit, it's going to get sucked back in. So be very careful. You can be in a trade like this if and only if it's in an active move. When it's here like this for the last hour and a half, 2 hours almost, you're dying, right? You're getting killed on both the calls and the puts. So you don't want to be in any kind of sideways action, especially like if it's the same week, even after something's reported earnings. It doesn't instantly come off. It burns off through the following week. So anyways, that's my 2 cents. Take it or leave it. Love you guys. You're awesome. Appreciate the support, everyone. Always fun to do this stuff. And yeah, I think that's it. All right, guys. I'll see you next time.